Hello, everybody. Welcome to our webinar, How to Create High-Performing Amazon Ad Campaigns.
We'll have just a couple minutes until we get started, right around 11:01.
All right, let's go ahead and get started. So again, welcome to the webinar, How to Create High-Performing Amazon Ad Campaigns. I'm Diego Sanchez. I'm the product manager of ADMANAGER here at e-tailz. I formerly have a search marketing background, so I have a lot of experience managing marketing campaigns and understand a lot of the problems that brands on Amazon are going through when marketing on Amazon.
I'm Darby Megan, Director of Product here. I have managed ADMANAGER before handing it off to Diego for the last about 3 years, so got significant marketing experience on Amazon as well. A little bit about e-tailz. We began as a retailer in 2008, got onto Amazon before there was a ton of software options, before there were a ton of gurus, before there was a ton of resources available online. So we really trailblazed our own path on how to succeed on Marketplace, and we've grown to over 100 million in annual sales. We've been expanding those service offerings that we have, marketing being one of the paramount and foundational aspects because it's one of the most surefire ways to grow channel sales for brands. Not to be overshadowed though, making sure inventory, supply chain, making sure that you're creating demand by having social media or inbound marketing, protecting brands, whether it's MAP, valid sellers, or authorized sellers, listing enhancements through creative, through SEO, tax, compliance. We do it all. Recently, in the last about 2 years, we started an agency branch and even a SaaS branch to offer this expertise and services to brands who are looking to grow themselves on Amazon. For some, it's their first foray and it's a first to market opportunity. For others, it's how do we keep increasing the momentum of their Amazon channel sales. Today, again, we're talking more about ADMANAGER and marketing. It's a little bit more of a technical webinar, but again, these concepts are foundational. So the state of Amazon marketing. Amazon is a key element for brands and growing. 47% of shoppers are starting their online shopping journey on Amazon with a search bar. That means that search marketing on Amazon is an incredible tool to help find new consumers and target your growth. There's a lot of competition, 2.5 million sellers greater than Amazon reported on their earnings, more than 150 million Amazon Prime members looking for product, purchasing a lot of goods, and more than 500 million products are listed on Amazon US. Again, to maximize that opportunity, we're seeing that brands can optimize their marketing and increase channel sales up to 30%. That's organic, not just marketing sales. However, it's kind of a catch-22 because if you're not really optimizing your marketing efforts, it's a big money pit that you're just shoveling money into and not seeing the dividends and the ROI. You can see a couple stats there. One of the most interesting thing is the first 3 items on a search page account for 64% of user clicks. 81% of the clicks are on the first page of search results. Marketing is a way that you can index higher and higher in Amazon's A9 algorithm, so optimizing it and getting the most out of your dollars is imperative to seeing success on the channel. Again, share of voice is getting harder and harder as Amazon has scaled up millions of sellers in the last 5 years. There's more competition, more people spending, more people trying to get in front of consumers, more private label sellers and smaller third-party sellers as well. Yesterday, we looked at 2 listing search pages, and you can see 14 out of 64 product listings on one search term were paid placements, 7 of which appeared premier placement at the top of the page the first thing consumers see, and another 6 out of 30 were, with 3 being at the top of the page. So we're seeing greater than 10% of all listings at the top of page preferred placement that 81% of clicks are going towards, and 64% on those top placements are due to marketing efforts. So every dollar you're investing, every hour you're spending, we're hoping to help save you time with these optimizations, save you money, but then you can also reinvest into other areas of your business or see your marketing grow. So I'll hand it over to Diego. He's going to talk a little bit about what we'll cover.
Wonderful. Thanks, Darby. So the first portion we're going to cover is going to be a little bit technical. We're going to be going over keywords and search terms, why that's important, specifically search term optimization. So taking advantage of customer search terms that are happening on the back end and integrating them into your campaign management so you can better refine and target your campaign performance. Then we're going to speak to campaign creation, why to architect your campaigns a certain way. You have the ability to really get granular with optimizing and derive a lot of insights depending on how you build your campaign. The end result is you know exactly what spend is attributed to what product, and you can use that information to inform inbound efforts and other strategies off Amazon. Then finally, we're going to get to automated bid optimizations. This is essentially going to be covering what our software does, the rules that incorporates. I have always thought about market on Amazon as, exactly what it is. And our software ADMANAGER is, a resource allocation software that maximizes your returns by allocating the dollars that you have to the keywords that are going to have the greatest return. And then finally, we're going to do just talk about if you currently have a search marketer, how do you validate what they're doing? Are they worth their salt? And then we'll wrap up with the live Q&A.
And just a friendly reminder, we do have a live chat. If you want to drop questions there, we can answer them potentially mid-webinar or near the end. Friendly or good thought is make it a field goal post. Too specific and it's hard to answer because we need more data and we dig in forever. Too general and it's sort of a wide net and it's hard to answer in a way that provides value. Happy to follow up with you afterwards though if you have specific or general questions. So feel free to add that into the chat.
All right, so first thing, keywords versus search terms. What's the difference? Well, a search term is the exact word or set of words a customer enters when searching on Amazon. This can be viewed by downloading the search term report from Seller Central or through an API connection. A keyword is a word or set of words that advertisers can create to target ads to customers on Amazon. Ideally, these are search terms that customers enter when shopping on Amazon. So you will have visibility on these search terms through the API to create a very efficient campaign. You should be mining those terms and manually managing it. And then the keyword type. So we have broad, phrase, and exact. So I have up here on the top table just an example of a keyword and then the associated match type with each. So if you're bidding on the keyword baby shoes as a phrase match type, as long as baby shoes, the order is the same and the spelling is correct, a word can come before or after, your ad will serve. So in this example right here, a customer is searching red baby shoes. This is a search term, but because baby shoes is in the same order and has the same spelling, your ad will serve. For broad, it's a little looser connection. As long as the terms are included in the customer search term, your ad will serve. Doesn't matter the order. So in this example, for the broad match type of baby shoes, your ad will serve as somebody searches shoes for baby. And then finally, exact, self-explanatory. If your keyword's baby shoes, the customer has to search exactly baby shoes for your ad to serve. And so these are just a few other examples of what that would look like just based off the keyword. But specifically, we want to look at the keyword baby shoes. And here are all the other variations of what can be searched and what your ad will serve. So baby shoes gifts, again, order and spelling is there. That's why as a phrase match type, this ad will serve. So really, if you think about it, and you break it down, phrase and broad match types will serve theoretically an infinite amount of, it will have an infinite amount of search terms associated with it, because there's a lot of variation as long as the search terms are associated, where with an exact match keyword, only one type, your ad will only serve for one customer search term, and that's going to be that exact match of baby shoes.
Worth also noting that the longer the search term, the higher the conversion rate. The more specific what the consumer is searching for, and the more you're able to direct your content to that specificity, you're going to see higher conversion rates. It's going to control your cost.
Yep. And so what we're speaking to right now and what we'll go over is search term optimization. And this is the process of migrating and negating customer search terms that are associated with broad and phrase match type keywords, as well as auto campaigns. And this is how you build a sustainable, efficient campaign, is you actually have data behind your optimizations and the migrations. You have a good idea of what the cost per click is, because you're already either bidding on them indirectly through the broad and phrase match types, or you're mining them from your auto campaigns.
Also worth noting, it lets you get more closer unit economics on the search terms, and so you can micromanage specific spend on keywords on their performance. So it's a way to increase the strategic overview and the strategic reach of your campaigns to drive more and more cost savings or that gain in ROI.
Yeah. And so right now what we're going to go over are some key metric variable definitions. Bid. Think of this as a maximum willingness to pay per click. Cost per click, what you actually paid per click, which is just going to be the spend divided by clicks. So if your cost per click is greater than what your bid is, you're likely not going to be serving an ad. Think about it, because if you're willing to pay $1, but the average cost per click is $2, you're not getting any placement. The conversion rate is orders divided by clicks. So if clicks increase, the more you're paying, essentially all else constant, to get, or if as the conversion rate goes down, it's essentially more clicks to an order. Spend, what you spend on a keyword or a customer search term. Sales, very self-explanatory. And ACoS, what you spend to get a sale. This is spend divided by sales. We also have this table here. We'll be going through this in a couple different examples. So visibility just refers to what you have the ability to see in Seller Central or through a software you're managing your campaigns through. Hopefully it's Ad Manager. The keyword you're bidding on, and then just what's going on in the back end, right? We know that the phrase match type baby shoes has a bunch of different customer search terms associated with it. They're each going to have a different cost per click, conversion rate. And so this is all you have visibility on without pulling any additional reports.
So we're going to run you through a couple scenarios. The first one is indicative of what it's like to manage without search term optimization. That line that he had, what the search marketer sees, it's going to essentially replicate that. But then in the future scenario, we're going to show you when you're managing your search term optimization properly, the positive impact that you're able to drive.
Yep. All right. So assumption, Darby spoke to it. This scenario one is going to have no search term optimization. The product price is going to be $20. The target ACoS set by the brand is 30%. And let's just assume each customer search term gets a sale a week. All right. So this is what you have. This is all the information you have on when managing your campaigns. Let's assume you're just looking at it once a week for over a 5-week period with the end aggregate performance view. And so this is for phrase. So you see there's 3 search terms associated with it. We have for the first week 3 orders, spend $11, sales of $60, great, 18% ACoS. But we also see a decrease in performance week over week, ultimately ending with a high ACoS. And so it looks like a search marketer here manipulated the bid. The biggest assumption is that they're looking at the ACoS and seeing that there's poor performing. They want to decrease their spend, so they decrease their bid, and we see a decrease in orders as a result. Spend decreasing as well, but a lot of missed opportunity.
Worth noting that this is a case where the campaigns are being overmanaged. As they manage it more, they actually decrease performance. So there is a sweet spot when it comes to marketing in the sense that you need to collect data. So you need to understand, aggregate, and respond. Sometimes doing that too soon. In this case, it's 5 weeks, but you do get this data on a daily basis. So you could be responding to this even up to the hour in some cases. So this is a very clear example of somebody overmanaging their campaigns without having the understanding.
All right, so let's get into it a little bit further and see what actually was happening. So for this example, we're going to be holding everything constant except for one variable that we're going to be manipulating, which is going to be the conversion rate. We're going to tell the story so you guys see exactly what's happening. So first week, very straightforward. These are the search terms that are getting the associated sales. We're going to start out just to be simple, a 10% conversion rate. So that's going to be 10 clicks to get an order. This is the associated spend that we have, just deriving it from the cost per click and the conversion rate. Again, it's a $20 sales and their associated ACoS. What you see is just an aggregate of this performance. And then we also have an exact ad group running with the same baby shoes. This is since we're holding everything else constant, we won't see this till the end. Just forget about it. It's getting sales as well. But just because the point is to show you the phrase match type and what's going on. Week 1, there we go. Same table. But week 2, let's say there's an increase in demand for baby gifts, baby shoes gifts. The conversion rate goes down. There's more clicks to get an order. It's becoming more competitive, right? So this keyword or this search term right here, conversion rate goes down. We're spending more to get an order. So this one, ACoS goes up to 50% because we're now spending $10 for a $20 sale. And on the aggregate, what you see as a search marketer, you see the ACoS going up because you're spending more to get those sales. We're at a 31.6% ACoS. It's above their target, but let's say the search marketer doesn't take action because it's not too far above. The following week, demand continues to increase. Conversion rate goes down to 1%, even more clicks to get an order, very competitive. Search marketer now sees the ACoS goes up to 48.3%, right? We're more clicks to the order for this customer search term. We spent $20 to get a $20 sale. That's 100% ACoS. On the aggregate, we see ACoS go up to 48.3%. So as a result, that's 18.3% above their target. The search marketer decreases the bid to 50 cents. What's actually happening on the back end is they've actually put themselves out of the auction because now that their bid is lower than what the cost per click was for a customer search term, they're no longer getting that placement. Sure, they're no longer getting the spend, but they're also no longer getting the sales. And because the bid is still greater than the most inefficient customer search term, they essentially just lost efficient sales. So as a result, additional changes here, ACoS goes up even further because they don't have that sale to average it out. So the change in the bid actually resulted in the ACoS going higher.
It's also worth noting that the search marketer will see a conversion rate on the top line. So they may respond by bidding that down, but if they don't respond with managing these search terms specifically into the exact campaign or blocking them or stepping into it, they're responding how you would expect them to respond. It's just they're not down to the level that they need to be to see this impact positively and as opposed to this negative impact. Again, they're over managing the campaign on accident.
Yeah, and this frequently happens because we all know, ACoS is at advertised cost of sale, their spend and sale, and that calculation, they believe by decreasing the bid, they'll decrease their spend, which they do, but they also lose on sales. So they see that 48% ACoS increase. They decide to be more aggressive in their optimization. So they decrease their bid to 30 cents. They're no longer getting placement for another efficient keyword. The bid is lower than what the cost per click is on average. So they still maintain the most inefficient keyword that just threw a wrench in their entire, marketing performance. So they actually see fewer sales, and a higher ACoS. Again, the search marketer isn't viewing the search term report. And so on this week 5, they see just a spend of $20 in sales, $20 with 100% ACoS. The reason why this is because the cost per click is greater than what the bid is. So an aggregate view of what happened over this 5-week period, Exact Match was still maintaining those sales. So no issue there. But what we ultimately see is for the keyword baby shoes, if you look over that 5-week period, you have a 30-cent bid. You've spent $102.50 for $240 in sales, and that's a 42.7% ACoS. Because nothing was going on over here with the Exact. You got those sales, maintained 30% ACoS. On aggregate, it's a 38.97% ACoS.
Cool. Real quickly, Diego, there's a question in the chat. It says, we've seen Amazon block ads for products that are related to the 2020 election because anything which has the word Trump or Biden is being rejected, even if it's a product. With this an election year, there's a huge impact, missed opportunity. Is there a way around this in marketing on Amazon?
You know, we're currently, so I think this speaks to just ultimately the way you do your search terms. So one of the major assumptions is that if Amazon is scraping that and sees that you're manually managing those terms, that's probably where the issues arise. But if you also have the ability to generate your keywords from an auto campaign and see what customers are actually searching and mine them from there, you're essentially just, or yeah, that's a difficult question, but that's what I'd recommend is creating an auto campaign, seeing what customers are actually searching. And if it is one of those restricted keywords, just let them continue to perform in your auto campaign and don't manually manage them. Just let your default bids in your campaign control the performance of those.
Yeah, it's a good point. The automatic campaigns, you know, this is only about phrase and broad keywords specifically. However, we're going to go a little bit into the campaign architecture, which allows automatic campaigns to also feed into exact broad and phrase keywords. That may be a good instance as well, where some off-channel spend may go a long way. Some viral social marketing potentially may be a better investment of those dollars, but that automatic campaign and seeing where you can get keywords may be the best way. So cool. Thanks, Diego.
Yeah. All right. So we're going through scenario 2. This is going to actually have search term optimization. So kind of referring to what you had that question before. Product price $20, target ACoS 30%, but we're going to say there's an arbitrary rule where if there's orders greater than 3, we're going to migrate and negate those search terms. Again, 1 sale per customer search term. The story is going to be the exact same. This is what it looks like week 1. We're only manipulating 1 variable. Week 1, aggregate performance, what the search marketer sees, baby shoes, the bid, what the spend is, and the associated ACoS. Same exact search terms. Increase in demand for baby gifts, conversion rate goes down, more clicks to get an order. Similar example to the first one, 31.6% ACoS, goes higher. Demand continues to increase. We're now at a 1% conversion rate, more clicks to get the order. This is what the search marketer sees, ACoS goes up. But because we have that rule of 1 order greater than, as long as orders are greater than 3, and the ACoS is less than 30%, which these customers' search terms meet, those terms get migrated over to the exact match campaign because they've been validated. We know what the cost per click is, and they meet our criteria. So those get migrated from the phrase ad group or the phrase campaign and migrated over to the exact ad group or exact campaign. So this is what it looks like. And apologies, this is, these should just be the keyword right here. So at the end of week 3, this is what the search marketer sees, baby shoes. The back end, they're continuing to bid on baby shoes gifts. And then the exact keywords have actually increased. So we now have red baby shoes and large baby shoes. Going to week 4, because they see an increase in ACOS, it was at 48%, the search marketer decides to decrease their bid to 50 cents. They continue to serve ads because the cost per click is lower than what the bid is. So they do see an increased ACOS. They actually see 100%. This is earlier than what they saw in the previous scenario, because the customer search term is still very inefficient. We don't have those other customer search terms averaging it out. But because all else constant, we're holding all else constant in the exact ad group, these continue to get the sales. The search market becomes more aggressive, seeing that 100% ACOS, they decrease their bid to 30 cents. Still, their bid is higher than the cost per click, so they're still serving for that customer search term baby shoes gifts. But because we're not manipulating these variables and they're still within the threshold, we continue to get these sales. So ultimately, what happens reviewing week 1 through week 5, there's still a high ACOS over here for the phrase match type. It's $89 in spend with $220 in sales. That's a 42.7% ACOS. But over here, since we migrated and negated all the search terms, and when I say negate, that means that when we negate these search terms, they're no longer serving ads for the phrase match type because they've been migrated over here. We're no longer, we want to do that, so we're not competing with each other. We maintain those sales, so the exact ad group per campaign now has $48 in spend and $180 in sales. It's a 26.7% ACOS. Overall, for all performance for the marketing campaign, there's 34.25% ACOS. And so if we look comparable, again, for this example, we just used very limited search terms, and we had a relatively higher ACOS and the spend was low, but this relates to somebody that's spending $1,000 a day or $100 a month. You know, it really depends. So without search term optimizations, they spent $132.50. They had an ACOS of 38.97%. When optimizing search terms, they spent $137 and they had a 34.25% ACOS. And so that 4%, more or less, that's a lot. You know, it's very important to allocate all of your resources to high return keywords. They maintain sales, and they even, you know, the difference over here is going to be $60. And, you know, if you apply this to what you're doing in your marketing, that $60 can be even larger. And so by not migrating and negating search terms, you really hinder your ability to sustainably grow your campaigns.
And there's a question there. How important is this keyword protocol when you're using automated targeting? I would say very important. Automated targeting is a great way to start marketing. However, it's a really great way also to inadvertently spend your money on search terms that Amazon is deeming as valuable, as opposed to what you're seeing as valuable, and to give a targeted budget to what you're investing in. So if you're only using automatic campaigns, we're going to touch on this a little bit later, you're wasting a lot of your efforts where you can more strategically align your goals with how you're investing on those keywords. So it's very important to know this, and you can make your campaigns very effective. For instance, I'll use a quick case study. We took over somebody's channel, marketing for them that was over 100% ACOS on sales. We were able to bring it down to 35%. One of the simplest things we did was create manual campaigns that harvested these search terms from those automatic campaigns.
Yeah, and I think even further, the analogy I actually just used the other day was, think about your auto campaigns as a mutual fund, like in finance, where you're investing. You put it in this mutual fund where there's a pool of different stocks and bonds. You don't necessarily allocate it yourself, but you get a return. You're able to see which ones you like and which ones have the greatest return. And then you can even start manually managing those on your own as an individual stock, versus you just choosing stocks and companies kind of arbitrarily, and you don't know what the return is going to be. You don't really have any insights into that. Whereas if you put them into a mutual fund, it's a little bit more sustainable and a little safer. And so, you know, especially with international markets where there's going to be a language difference, Google Translate is only going to work so well. So when we created our first campaign in Mexico, we actually created an auto campaign first. We saw what people were actually searching, and then we started to migrate those over to our manual campaigns to continue to build from there. All right, so search term optimization. It's a time-consuming process. Seller Central versus Ad Manager. So currently what you have to do in Seller Central is download that report. You have to juggle multiple spreadsheets. You have to have your bulk file to upload it. Then you have to navigate all those errors. In Ad Manager, we understand that a lot of your time should be spent actually investing more in building your brand. So what we're currently working on to be released here soon is Ad Manager search term optimization, where you have the ability to set that rule and it will automatically migrate those search terms and negate them from where they were from their origin. So in this example, we had orders greater than 3 and ACoS less than 30%. A search marketer will be able to create that rule and not have to worry about migrating those search terms manually. And this is a great segue into campaign architecture. So you have to do something you have to architect your campaign that's conducive to search term optimization. So you have to be able to negate terms. What that means is you can't have exact match types with phrase match types in the same ad group, and you can't have exact match types with broad match types. You also have to have your campaigns built out one product per ad group, right? You want to be able to migrate a search term that's associated with an individual product and migrate that to that same exact product. So if you have 10 different products in a campaign, it becomes very difficult to attribute which keyword got the order for which product. And that's why we created the Ad Manager Campaign Wizard. So I'll be jumping over here to show you guys what that looks like. So when building the campaign creation wizard in Ad Manager, we wanted to nudge users to build and architect their campaigns in a way that's conducive to search term optimizations, as well as getting very granular reporting. And I'll touch upon it later, get very granular in your optimizations. So here you have the ability to create your campaign name, set a daily budget, what the default bid is, select the targeting type when it starts, select your products. And when you select these, it will actually build one product per campaign. You'll be able to assign keywords and the match types. You can copy and paste an entire list. You can add to all. You can add negative keywords. And once completed, you could submit to Amazon. It'll take a few minutes for it to appear, but it will now be able to be managed through Ad Manager as well as in Seller Central. Oh, looks like
there's a question in the chat about, and we're about to go into automated bid optimizations, which are going to cover target ACoS. But somebody asked, what would you consider a healthy target ACoS? The answer is going to be, it depends. We're a third-party retailer in addition to agency and SaaS provider. And so for us, we run tighter margins than our wholesale partners who may sell direct to consumer. For us, we target about a 10% ACoS because that's what our margin allows. On new product launches where we have vested interest with the partner and there's some shared marketing expenses, we can see as high as 20, 30, sometimes 40% if it's new to the market and it's a product where they're trying to gain market share. Something for some people who have larger margins that maybe they're direct selling, they are the producer and the seller themselves, they're able to sustain greater than 30% ACoS because it's driving organic sales as well. So to the asker of that question, if you have further insight that maybe you can add, we can also schedule some time after this and walk through some of that, setting a target ACoS for your brand.
Yeah, and there is a lot of variability in that. It really depends on, is it a new product? What's your strategy? Is it, do you want to go for, a big release where you're not necessarily Looking for a lot of sales, you're looking to drive organic growth. Are you okay with having, I've recommended 70% ACoS, just because it was in line with what the partner wanted. And so our automated bid optimizations actually incorporate. So next steps after you have all your campaigns done and you understand search term optimization, the biggest piece is going to be automating bid optimizations. So our rule set actually contains two different rule types. It's going to be value-based optimization. And this is very important because it drives sustainability and efficient growth, because optimizations consider net margin when making your optimizations. So what optimizations is just referring to is increasing or decreasing your bid. And so this ensures that you're only spending what you can afford. So in the example here, brand X sells product A on Amazon. It is priced at $100 and has a 25% margin. That's $25. Brand X has a 10% target ACoS, which means the maximum they're willing to pay per sale is $250. And this $250 is derived from those margin dollars, right? That 10% of $25. So they're willing to get $250 for a sale. This represents what we call an ideal cost per acquisition. And if we assume that their 2-week rolling conversion rate is 10%, meaning they average 10 clicks to an order, they're willing to spend 25 cents per click. This is what we call their ideal cost per click. So that 25 cents is derived from that 250, and that conversion rate is just using historical performance numbers. Not very competitive, right? 10%, if you're willing to spend 25 cents per click, you're probably not placing in a lot of auctions. So a lot of the conversations I have is, setting a realistic target ACoS. And so we can see at the top, if they were to send a 10% target ACoS versus a 30 versus a 50, what the ideal cost per acquisition according to each one, and assuming a 10% conversion rate constant, what they're willing to spend per click. So that 25 cents a click, not competitive. You should really think about what you're willing to spend per click. Depending on what category it's in, it can be very competitive. 25 cents is not going to get you a lot of placement. 75 cents is more competitive. You're likely to continue to serve ads. And then for that final example of that 50% target ACoS, you're willing to spend $1.25. And so the hopes, whenever I'm speaking to a client, I rarely suggest pausing keywords and negating them just based off of egregious poor performance. I think there's a lot of opportunity and a lot of insights you can derive from those. I actually classify them as investment keywords. So if you did your due diligence on keyword research, or you migrated them from existing auto and phrase and broad match types, it is relevant to your term. You should continue to maintain visibility on that. And the lower you set your target ACoS or your ACoS goal, the less likely you're able to see what performance is like. And ideally, you should be incorporating that keyword in your inbound marketing, having it included in your product listing, just a lot of SEO opportunities there.
It's also worth noting that these concepts around ideal cost per acquisition and ideal cost per click, that's all centered around unit economics. And these, again, change pretty drastically, even sometimes throughout a day. Amazon aggregates the data and sends it to you, but responding to these too quickly may actually be a detriment to your management efforts. So if, for instance, your conversion rate goes from 10 to 12%, it's going to wildly affect the bids that you're willing to see. So it's worth noting these unit economics hold true, but that window in the aggregation that you're looking at, that's where you're going to want to target it. We recommend a 14-day for that manner, a look back, and it allows us to smooth the curve with our responses to these bids.
Yeah, and this also goes into our, this directly ties into the campaign architecture as well. So if you have two different products, even assuming the same price, if they have different net margin, you're willing to pay, depending on what that is, less to get a sale for one product versus the other. And so when you have them together in a single ad group, the keywords associated with them are essentially, it's going to be very difficult to optimize. And in an extreme case, if you have two different products that are in the same ad group that have different price points, let's say a $10 item and then a $100 item, if you have a target ACoS of 10%, you're willing to spend $1 to get a sale for that $10 product versus $10 for that $100 product. It's very difficult to manage the bids when they're grouped together. And that's another reason why we do one product per ad group. Another rule that's incorporated, a rule type, is going to be rule-based optimization. So this is going to be the second piece of our automated optimization puzzle. We've been refining this for over 4 years. We've done a lot of different testing. And so rule-based optimizations are intended to catch the keywords that are missed by those value-based rules, right? The value-based rules mean that you have to have a sale, a conversion rate to be able to be optimized. We understand that there's keywords that are what I term as investment keywords that have spend and no sales. There's keywords that are not placed in auctions, they have no impressions. Those have to be managed as well. And so we also incorporate that rule-based optimizations in our automated optimization as well. And so I'm actually going to jump to Ad Manager to show you what it looks like on the front end.
Friendly reminder, you can drop questions and we'll answer them live or near the end of the webinar.
Wonderful. So we've actually just compressed our entire rule set that we've been validating for over 4 years into, it's 14 different rules, I believe, both value and rule-based, into just a very simple, user-friendly interface. So in Ad Manager, you have the ability to set the target A costs. If you have uploaded your product margin, which you can do within our products table, these optimizations will be optimizing your keywords based off that margin. So a user will be able to set the target A costs, select the days it runs on, turn it on, save, and it will start managing your bids according to this target A cost. We have it looks at a few different windows of time that it considers in the optimization. Ultimately, this is how we've been able to see such sustainable growth of e-tailz. We have over 60 million in sales with a 10% A cost, and this is why. Additionally, we understand you might have separate goals for different campaigns and possibly even ad groups. So we gave the ability for users to create custom rule sets. So you have the ability to create the same rule set that we have running, or you can create your own. So in this example, it's going to be orders greater than 5, A cost less than 15%, bid up 5%. These are the bid down optimizations, have different buckets of 20 to 30% and 30 to 45%, bidding down different values. You can create a bucket system, a tiered system. You can get very granular. You can have an infinite amount of rules, and you can apply it to the campaign or the ad group level. So really, really refining your marketing performance. You can have this custom optimization running while having that global rule set that I did previously running. We do have a hierarchy. So if you have this assigned to a particular ad group and you have that global rule set, it won't be double bidding and double optimizing. So again, taking out a lot of the time that you have to manage your campaigns, and it really takes out the human bias and the human element from managing your keywords.
There's a question, how do we know what the actual bid amount for a particular keyword is? Amazon doesn't really share that, do they? If not, how do we know what our bid is going, if our bid is going to compete or not in the auction? So they use an auction method where the second highest bid actually gets the service. One of the things that they do share is a cost per click. It's worth noting though that you can reply, and there are people who are changing their bids throughout the day. So you may have the bid early in the morning for more expensive, but then as other marketers are running out of budget, the cost per click fluctuates. And so they don't share what the bid amount is because it's always changing. However, they do share a cost per click, which is an average. You can also derive that by doing total spend divided by orders. So we do see quite often that there's a pretty big disparity between what you're bidding and what the clicks are coming in at. For these phrase, broad, and automated keywords, it's worth noting that sometimes those are wildly different as different search terms are searched, as opposed to if it's an exact term and you bid 50 cents, you're never going to spend 51 cents. So
yeah. So the cost per click that you get for the exact is going to be it's going to have the most insight into it, because it's, there's only one search term associated with an exact match type, where where we showed in the scenarios of search term optimizations, you can have 3 different customer search terms that are being served based off of like a phrase match type. Each of those will have their own cost per click, and so that average is going to be, there's going to be a lot of variable in that. And so, that's another reason why we recommend doing search term optimization, is because you have better control, right? You know exactly with the exact match type, what the bid is, what the cost per click is. You have a pretty good idea, versus there's a lot of volatility with broad and phrase match types.
wonderful. So real quick, we're going to cover what we call, is your search marketer worth their salt? Again, we shared some numbers at the beginning about the number of sellers. As a business opportunity like this opens up, more and more people are flocking to the market. Agencies are starting every day. Search marketers are on many different sites that you can find them. And so it's getting more and more crowded, and it's harder and harder to filter out the noise, find a good marketer, find a good contractor, find an agency that you can partner with, or a retail partner. It's also worth noting, Amazon's growing 40% year over year with their revenue that's generated from these ads. So again, they're growing explosively, and every opportunity that you get to optimize your spend and your keywords is going to pay dividends in not only your bottom, but top line. The other thing to be aware of whenever you're talking about working with your team, working with an outside contractor or agency, is that there are lots of metrics that you can share, and we want to be aware of what we call the optimistic storyteller, in the sense that sometimes you can highlight 1 or 2 metrics, like, oh, your ACoS is doing great, but you're not generating a ton of sales, or maybe you've cut spend by a lot, but again, you're not generating a ton of sales. We love Bob Ross. We just hope he's not our search marketer that's painting a picture that's happier than it is. So some questions you can ask from somebody that you're considering hiring, or somebody that already works for you, or a contractor or agency, is how often are you going to optimize using the strategies that you just learned in this webinar? Is it every day? Is it every week? Is it every month? Is it every 6 months? We've seen that is a key consideration. Some folks are going to be fairly affordable and can help you with this marketing, but they may only log in once a month, and so you're paying for what you get. As well as if they tell you, oh, every day, they may be over responsive and over managing, like we mentioned in the first part of the webinar. Another question to ask is, what cadence are you as the customer going to receive performance reports? It can be a little bit unnerving. Diego mentioned it's like mutual funds and stocks. I don't know about you, but if you're looking at your stock portfolio every day right now, you're in for a pretty sweaty ride. It's gone down quite a bit today even. And so you don't want to look every day, but a weekly cadence might even be too much, because optimizations take a little bit to hook in. And then additionally, we target a monthly cadence. So that's what we found to be the most useful. That's not overreactive, but also allows us to strategically shift. How are they planning to hit your strategy and manage to it? You may have a percentage budget of sales. You may have a percentage budget of just total, you may say $10,000 a month on your marketing. How are they going to manage that effectively? How are they going to optimize it? Ask that question. Are they using an ACoS target? Are they going to be, trying to reduce cost as much as possible? Are they going to be targeting only sales? So sometimes you can get into these pay for performance oriented relationships. And one of the things worth noting is as sales increase, you may be increasing your spend inordinately by a lot. As well as, do you have any high valued keywords and search engine result pages that you're trying to move up in? Is it a branded term? Is it a competitor's term? Is it a specific industry or category niche keyword that you're targeting? If you have those, you should talk to them about it and make sure that they're aware, because some of those may be higher cost with a higher conversion. Some of them may also be super cheap, and so your ACoS may get pulled down by some of those keywords. So ask them some questions about how they plan to manage it, bring up some of these metrics, see if they can offer you some expert advice there. Something worth asking with this search term optimization, one of the things that we find is that, and a lot of times for larger budgets, we split out branded keywords into their own series of campaigns. We have a 7 campaign build that we've historically used for our bigger marketing partners. And what that does is it prevents overspending on branded keywords. In some cases, it's pretty easy to spend more than 50% of your budget with your branded term in the search term. So ask some questions about how they're going to manage that. How are they going to optimize between branded and non-branded keywords? Because you ultimately are trying to find consumers who aren't only searching for your brand, because that's where you're reaching new people and you're getting more share of voice. Ask them what organic sales lift you can expect. Again, what we found is good products with good effort, good inventory, positioning and logistics in place, we can raise sales by 30%. You're going to see some people who proclaim higher than that. Again, I would say there's some instances of the law of averages and also the Bob Ross. There's some partners that we've seen explosive growth with from marketing, but we use 30% as kind of a prescriptive way where we can help out. So with that being said, and those things to think about when you're working with a search marketing agency, contractor, somebody on your own team if you're owner or a director at a company. Now, things you can go actively check on. So one of the key things that we recommend is when you log in and you look at your marketing on Amazon, are the only campaigns turned on automatic? Because if that's true, all of the optimizations we've talked about, all of the nitty gritty savings and like growth that you can see doesn't work, because you need to manually get to the level of micromanaging these search terms and keywords, micromanaging these budgets across products, micromanaging even just your bids throughout the day. So if you're only on automatic targeting, there's a ton of optimization that you can make to your campaigns. Second thing to check on, you have automatic campaigns and manual campaigns. However, your automatic campaigns are generating significant parts of your spend. If it's new, this is not necessarily true, but if you've been running marketing on Amazon for a while and your automatic campaigns continue to produce a ton of spend, you need to know if you're getting search terms added to your other campaigns, because if you're not, there's a lot of unoptimal spend in those that you could be managing on a very specific basis and targeting search engine result pages to get more sales through that A9 algorithm. The next thing to check is that automatic campaign. Do you have negated search terms? It's good behavior. It's the same as above. You don't want your automatic campaign serving against your manual campaigns. It's just bad etiquette. It ends up muddying your metrics and makes it harder for you to manage those manual campaigns and your specific cost, ideal cost per acquisition and ideal cost per click. Small groups of products utilizing majorities of spend. If you ask them about performance on a product basis, they're going to need to do some work with this campaign architecture, one product per ad group, or else the metrics blend across products. But if 2 of your products out of 20 are generating 90% of your sales and spend, you may be, again, working with somebody who's optimizing for performance on those 2 products and thus, maintaining the contract. If you have goals for specific product lines, if you have goals for specific products, if you have budget, that you want to allocate to products, again, you may just go check and see or ask some questions around what is the product mix for these results. Again, you're hopefully running a holistic brand. You're going to want to see a wider net. You can focus on your keystone products and your flagship products. You just want to make sure that they're doing right by you there. Again, I'm not going to labor on this any further. The branded keywords not accounting for your spend, that's an easy quagmire. And then you want to look at your highest performing keywords. So we like to present the 10 highest keywords that are by performance for the brands. It allows them to see where they're serving in the auctions, where they're attempting to move up in the search engine result pages. Amazon's A9 algorithm goes and weighs in this marketing effort. And so when you're getting shown your highest performing keywords, if all of them are branded, it's a quick smell test. If all of them are very specific, and you're not reaching more general, you may be able to ask some product marketing mix to see higher ROI. Excuse me. So that's how you can tell if your search market is worth your salt. If you have any questions, if you'd like follow up, if you'd like even a marketing evaluation, reach out. Happy to offer some expertise and some advice if need be. So we'll get to a couple questions.
Wonderful. And on additionally, we are currently offering a trial of Ad Manager, a free trial where we do go through those things and talk specifically to what you're looking for in a software and what your strategy is and what your goals are. So looking forward to talking to you guys. And Darby, sorry for jumping ahead a slide. I feel like I did that a lot. All right, live Q&A. It looks like the one we have right now is, can you specifically differentiate Ad Manager from Helium 10 software? Yeah, so I think one of the biggest pieces, is going to be the expertise. I feel like we've been marketing, we've been actually as a business have been on Amazon for a long time. We've been our own incubator. We have validated all of these strategies that we have incorporated to our software. We know how they work. We know what the expected returns are. We've done a lot of A to B testing, and really we've tested it against our own business. And we're not going to put a product out there that doesn't work. And so specific feature sets, I believe the campaign creation one tool is going to be probably one of the biggest things. Again, I'm not too sure what they're offering currently, but from what I've read up on most recently is they don't have a feature like that. So specifically building your products to promote that sustainable growth that I touched on. I do see they have keyword recommendations, but a big thing is there's no transparency on how those optimizations are being done. I went through clearly what we had. So we do value-based and rule-based metrics. It's going to be based off of margin. There's going to be conversion rate incorporated in it. We also have the ability for users to create their own custom thresholds. Another thing as well is going to be just the level of support that you have. We know that, the success you see from the software is ultimately going to be whether or not we want you to succeed when using our software, and we're completely devoted to that. We are customer obsessed here at e-tailz, and we're constantly working through those solutions with you.
There's a follow-up on the target ACoS conversation that we had. Are you saying that 30% is a healthy target ACoS because you're gaining long-term customer who comes back without having to spend more? Having a hard time understanding why 30% is a healthy percent of retail cost to spend on ads. Again, I think 30% may be completely egregious. We would never spend 30% on our own marketing ads unless it was on a first to market launch, a new product coming to market, because we're attempting to create visibility for consumers. That's a more specific question, I think, because that target ACoS is going to drive a lot of your marketing strategy and optimizations. And so I wouldn't say 30% is prescriptive to specific scenarios. Again, 10% is our target. We've seen some brands that really want to aggressively gain consumers because they're in the early stages and it's the first 3 months of their product launch. So 30% could be extremely healthy because their organic sales are almost very small comparatively to their goals or their inventory position. So we can speak more specifically to that scenario. I think that target ACoS is a really strategic conversation, and it may be better to just circle up and discuss.
Yeah, and it's not a one size fits all. And so in that example that we had, going back to that scale, right? If you have that 10% ACoS on a $10 product, you're willing to spend per click something completely different than if you're willing to have that 30%. And a lot of the conversations I have is, it seems like with marketing, it's always the race to zero, right? 0%, lowest ACoS they can get. But inadvertently, what you're doing is you're eliminating the amount of keywords you can bid on. So if you have a keyword that's relevant to your product, but currently not relevant, as deemed by Amazon, you lose visibility on that. And so ultimately what the goal with our software is, and that kind of goes to my philosophy of not pausing keywords and maintaining visibility on those, is a keyword that's performing at 80% 1 month, you should be targeting specifically in your inbound as well as on your listing, with the hopes that those efforts are going to pay off the following month where it's at 50. And if you have a 10% ACoS, that 80% keyword that's performant is less likely to appear. And so, at that 30%, you're more likely to have visibility on that. And it's all about your keyword distribution. And so we do have a blog currently on our website, kind of talking through that. But we work with you. We're excited. Like, it all depends on what your goals are, and the 30% might not work for you, and we completely understand that. And so I always like to have the conversation of ultimately what your target is doing to your keyword pool and how that affects the distribution. So,
seeing something, campaign architecture. Do you recommend separate campaigns by item or separate ad groups? I would say it depends on your budget. So if your budget is larger than say $500 for each product, I would manage it separately on these campaigns. If you're talking about a $500, $1,000 total spend across a large number of products, the ad groups are going to be the way to go. It also depends on what your campaigns are trying to accomplish. We recommend, for instance, seasonal products, or when a product like barbecue supplies are going into the summer seasonal, maybe it's worth running a highly specific seasonal campaign that you pause while you keep your original campaign running, because relevancy is a major contributor to these campaigns and the service that they get. So campaign architecture, what we definitely recommend is that products get their own ad groups. And if you're going to separate them out by campaigns, it would be more budget specific, as well as how diverse of the strategy are you looking for? Is it a new product launch and you want your sustainable marketing in another bucket? That's something we recommend as well, is depending on what your strategy is. If you have follow-ups on that, feel free to reach out.
Yeah, and further, just touching upon that further, I think the analogy I like to use of a fixed budget, ultimately the more campaigns you have, I think about it as a pizza, the more and more you're kind of slicing and getting smaller pieces, and it's harder to distribute. But that's campaigns, building out your marketing by one product per campaign definitely gives you the granularity of being able to control what spend is being allocated to what product. But if you have a low fixed budget, it might not necessarily be the best solution.
Well, next question. Does Ad Manager provide direct visibility into sales history prior to paid campaigns to compare performance metrics? We're working on that. That's something we're well aware of. We do have the ability to report on that externally. We have another service, and we're working to integrate that financial service into Ad Manager so that you can see before and afters on that sales. So not yet, but we are able to provide you that in-depth reporting if we're working with you directly in an agency-like relationship. For a more SaaS relationship, we'd need to work with you on two different fronts, but that's coming specifically. Next question is, once we start pay-per-click, will we receive stats on keyword effectiveness? The answer is yes, we can do that, definitely. If you have target keywords you're going for on a search, you want to trend higher on these search engine results pages, we are more than happy to report to you on these keyword effectiveness. Also, we didn't cover it today in the webinar, but Ad Manager has a full keywords table that you're able to see how your keyword related to your campaign and ad groups are performing. And so it's agnostic to what campaign they're in, agnostic to what ad group they're in. You see them all next to each other, so you're able to get a holistic view of your keyword effectiveness within the app. Or if you're in a more closely related retail or agency relationship with us, we're able to report on what you're looking for more specifically. Great. And how is Ad Manager product priced? Currently, it starts at $150 a month. It is sliding scale when it comes to what ad spend that we are helping you manage. We also have managed services that we can run agency with you for $1,500 a month. Starts at. Reach out. We have trials of both the managed services and software services that are available. We're convinced that we can save you significant amounts of money, and we'd love to trial that for you and work with you to find something that fits. So that's how it's priced, starting at $150. It does scale up as your spend scales up. It reduces percentage spend, and the managed service obviously is going to involve a lot of our efforts. And I'm not seeing any other questions. We'll give another 30 seconds for additional questions. We're about 3 minutes over on the webinar. Apologize for that. Hopefully this has been super helpful for you guys in managing your own Amazon campaigns or finding a partner who can help you meet your marketing strategy on Amazon. And this has been recorded, so we'll be able to distribute a copy as well to the attendees. Seeing the thank you. You're very welcome. We're glad to help. Again, Darby Megan, DARBYM@e-tailz, E-T-A-I-L-Z.com, or Diego S, D-I-E-G-O-S @e-tailz.com. If you have any further specific questions, again, I'm thinking that target ACOS question warrants some follow-up. We'd be happy to make times to discuss with you your specific marketing strategy, whether it's us, whether it's one of our marketing team members. We want to be available for you so that we can help you meet your needs. Our vision is to be a brand's ultimate online growth partner. The only way we think you can do that is by having an effective strategy that's tailored to your brand. So feel free to reach out to either of those, DARBYM@e-tailz.com or Diego S @e-tailz.com, and we'd be happy to connect with you and discuss more. So thank you so much for attending the webinar. You have a great day. Hopefully you're safe and healthy in these interesting times. So have a great day.